All right, welcome everyone to another refresher here. This is the 26th June, and today what we're going to do is, first of all, we're going to do a refresher on gold, right? It's going to be something that we've done before, but I think, going over simple steps makes us a better trader. That's how I've been doing things like for the past 6 years. So basically what we're going to do is in this simulation is we will start simulation first, and then we'll start off by identifying the most recent zones. Then we're going to start off by identifying target zones, potential target areas where price way may go, and then we'll start to look at confirmations. What confirmations can we get? And hopefully we can get some good volume in the week we will choose to get some good trades. So first of all, we're going to get some random date generator here. We're going to start off with some random dates over here now. We're running in June, so let's do something like January 2020 up till June. Yeah, let's do that. Let's do up till April. Or we can go back to September 2021. From the 1st of September going all the way down towards 29th. I kind of want to do something in 2022, but anyway, let's see. Let's see what we get. We're going to start with Sundays. We're going to select 20 dates. Let's get the dates over here. All right, here we go. We got September, October, November. We have March. We have April. Regular, we should take trade in pre-London. Listen, everyone, listen. This refresher is only going to be about this refresher. Any other question you have other than the refresher, like what trades to take, what risk to use, what lot size to use, what account size to use, leave those questions to Slack. This right here, I don't want to waste my time, and most importantly, I don't want to waste anyone else's time here in this refresher. So we're going to keep it strictly based on what we're talking about here. If you have any questions during the refresher, I would please keep those questions to yourself until that question is answered. And I can guarantee you this. As we go through the refresher, each and every one of your questions related to this refresher simulation that we're going to do is going to be answered. Trust me on that. I'm an expert in answering questions without you even asking the questions. But in case sometimes I'm not that much of an expert, but if I do miss it, then you can go ahead and ask it. But if you have a question, wait 5 minutes and it's going to be answered. What's this? October 17th and 7th November. Okay, let's do 7th November over here. 7th November. All right, 2021. Let's do this. So we have this. We're going to update the news terminal right here. It's going to get updated. Close this. New simulation. We're going to start with gold. 2021. 2021, November 7th. Starting balance is going to be, let's say we're going to start with 10,000. Yeah, I think 10,000 is pretty good. So last week, someone mentioned that maybe go with so spread, we're going to do a fixed 15 pip spread over here. Yeah, so like last week, someone mentioned let's do let's only focus on the 1 hour and the 4 hour and start executions on the 30-minute. So that's something that we're going to focus on here now. First, we need the weekly time frame loaded just like that, and then we're going to start off with the daily time frame and then the 4-hour time frame. 1 hour, 30 minutes. That's it. We're not going to look at the 15-minute. We're not going to look at any other time frame at all. We're only going to execute based on the 30-minute time frame, and we're going to start analysis based on the 1 hour, 4 hour, and then daily and the weekly. Make sense? Perfect. Makes sense. Okay, so we got the 30-minute time frame. Let's load up the 1 hour time frame. Oh, okay. 1 hour time frame, 4 hour time frame, daily time frame, and weekly time frame. Awesome. So just by looking at this weekly, Okay, first of all, we need to go towards our session time, right? Session time is going to be pre-New York, pre-New York, and we're going to go forward. You can look at the time right here. This is London Open right now. 4, 5, 6, 6 a.m. Eastern right here. So looking at the weekly candles, we can see that the previous weekly candle closed with no or little to no wick on the top, right? This means that maybe there's a 50-50 chance that this weekly candle is going to go up or it's going to reject, because we also got a resistance right here. So we're not sure. Let's take a look on the daily time frame. Looking at the daily is in the same situation right here. Let's do scale fix. Daily is in the same situation. We have, let me bring up these lines over here. Where are they? View, toolbars, charts. Perfect. We got charts, view, toolbars, and line studies. There we go. Let's extend it all the way right here. Awesome. So if for some reason daily does go up, this is a 120 pip range right here. But the previous daily candle closed with little to no wick, and we don't know whether this candle is going to go up or not. Now, if we say that, okay, there's a probability for the daily candle to move up, then what we got to say is that, okay, maybe we're looking for some sort of a supports to be formed on the 4-hour time frame, because if we can get a 4-hour support formed, then there's a probability for not only the 4-hour to go up, but then the daily candle to continue pushing up as well, right? So that's something that we're going to take a look at now. Now let's zoom out here a little bit, right? Now, based on the 4-hour, we need to identify two things. We need to identify the most recent support and the most recent resistance. So the most recent resistance is obviously right here, because we can see the 4-hour candles there creating a resistance. And the most recent support is probably going to be somewhere over here, right? But we can also see that there are wicks going through this zone as well. So my rule of thumb is, what I like to do is, whenever I see wicks going through a zone based on a 4-hour time frame, especially like this, and they're kind of like rejecting in the same area, I like to draw my zone right there, right here, right? Only on the 4-hour. Because these wicks on the 4-hour, they may be like, clean candles moving on a 1-hour time frame, or clean candles on a 30-minute time frame. So if we measure these wicks, this is like, okay, 34 pips right here, right? Which means that maybe there's some sort of a support on the 1-hour or the 30-minute. But first of all, we need to see our most recent resistance on the 4-hour. Perfect. Now, the question is, what if we break this resistance? I guess if we break this resistance, price can probably come up towards this resistance right here, 1826, which is 53 pips away, right? Makes sense. Perfect. What if we break support? If we break support, I guess there's a clean candle to the left hand side, and price can continue pushing down, but maybe price may reject somewhere down over here, maybe, right? Because if this was some sort of an important area, which we can see in the past, this was important, which is why we rejected, and then this monster candle just ignored all this area. So if price does break below, it still has around 45 pips to move down, but it may also reject this area. So let's take a look on the 1-hour time frame. Now, looking at the 1-hour time frame, we can see we obviously have the same resistance, right? And then now we have this support on the 1-hour time frame right here. So we have the resistance, we have the support. Let's just adjust this here further. Now, what we got to do is we have to measure this range. This is a 87, 80, 83 to 85 pip range right here. So now we got to identify, what if we break the support? Price is most likely to continue pushing down, maybe down to here like 50 pip range, or even down to here like 100 pip range. But looking to the left hand side, it's kind of like, in the same area, but I'm not sure, right? So what's kind of want to look at this wick right here on the 30-minute time frame to see if this is some sort of a rejection. So first we're going to clone these over to the 30-minute, move over. So there we go, we got them cloned. So maybe this is going to be an area where price may move down, right? Or what I'm thinking is, let's go towards properties, scale fix, that if we now, if this is a pre-New York session, so pre-New York session has a lot of volume, right? And price will only move a lot when there's a lot of volume. Now, these are big candles right here, right? And as this was a big candle, next candle was a big candle. Big candles mean, like good volume. Next candle was also a big candle, good volume. And now the size of the candles is start to get smaller and smaller. So when the size of the candles, it starts to get smaller and smaller, this means that there's maybe some probability if the new candle breaks the low, we could continue pushing down in this 37 pip range, right? But if you do break above this high, above 1818, then this is 26. Yeah, it's not, no, would kind of want to see some sort of a break above this area to even anticipate that move up, right? So let's see how price starts, and then we will continue on to see if we can get some sort of a trade at this point or not, right? But ideally would want to see price to break below that low right here to see if we can continue pushing up or down. How big is this range? This is a 36 pip range. 36 pip range. Speed it up here a little bit. Okay, we have created a top wick. See, here's the thing. If price creates a top wick, right? And if it breaks the low of the previous candle, then there's a very high probability okay, I guess not. So now it's moving up over here. So now as price is moving, we have two scenarios in mind, right? If we break the high, it could possibly continue pushing up, or if it breaks the low, there's a very good probability it can continue pushing down. So that's what we're focusing on here today. So you can see right here, we've broken the high of the previous candle. Let's put our risk in percentage. So we're going to be using around 1% risk throughout this simulation. Just 1% risk, nothing major. Just a harmless 1% risk, based only on the 30-minute time frame. All right, so you can see the time right here. This is the close of the first half of the 30-minute candle, right? First half of the 30-minute candle. This whole area, this is a very strong rejection area right here. This is a very, very strong rejection area. So we're waiting at this point. Okay, so I think we're about to break the low right here. And if you break the low, I think that's going to account for it. See, right here, we're breaking the low of the previous 30-minute candle. So now you got to make a decision. Remember when we were looking at this, we're like, okay, if we can break the low, there was a clean move going up. So maybe then we can have the same sort of a clean move going down at the same time, right? But that didn't happen. What happened was that price broke the high right here, and now it's starting to break the low in the second half of the 30-minute candle. So we're not going to look at the 15-minute time frame. So this is going to be an impulse entry. Stops are going to be above this current wick, and then we're going to anticipate price to continue pushing down towards 1812. Make sense? There should be, I guess, little to no question based on that. So we're going to execute this sell right here. And so stop loss is going to be what? Stop is going to be around 16 pips right here. So it's going to be 16 pips. Take a sell. Take a look at this trade indicator. And yeah, that's it. Let's see here. See price is moving. Let's get pips. We're about 3 pips up, right? Very simple. Nothing complicated here at all. We're about 6 pips, 7. See, it's good. Now we're about to break the low of the previous candle. We still got about 10 or 9 minutes left here for the candle to close. Would you consider using 5-minute structure entry? No. See, we're not looking at the 5-minute, we're not looking at the 15-minute, we're only focusing on the 30-minute and the 1 hour time frame and the 4 hour time frame. That's it. I don't look at the 5-minute impulse entry structure at all. I don't. Because the lower the time frame, the less the confirmations that you're going to get. Right? And as we wait for this candle to close, I think this should be a good idea for price to move down. What's this? There's this losing trade managers. Yeah, if a candle make a top wick, break the low. Is it? If the candle didn't make a top wick, that didn't happen. What happened was we made a top wick and then we moved down. So we're up about 11 pips right here. So right here, I'm going to close around 90%. Put stops at break even, and let the rest run. If we continue pushing down, amazing. If we retrace, still amazing. Since daily was 50-50, the 4 hour became a stronger bias for it to drop. Yes, I think so too. Oh wow, look at that. Moving very, very nicely here. The 30-minute candle has closed with a wick. Now the next candle here, the 30-minute, should create a top wick and then continue pushing down. Now, before someone asks, right? Before someone asks, if we make a top wick and break the low, yes, you can add an entry at that point. But we need to break this low in order to add an entry for price to continue pushing down. Make sense? Yeah, so we're going to wait over here. See, right here, this is breaking the low in the first couple minutes right here, right? In the first couple minutes. So once it does that in the first couple minutes, to me, it's like, yeah, I'm not too sure, because maybe it can make a much higher top wick right here. So probably not too sure. This is why when we executed the previous trade here, it broke the low in the last, in like the last half of the 30-minute candle. When you say close 90% will stop the break even, what do you mean exactly? Wouldn't that be your 1-to-1? Yeah, that's 1-to-1. I close 90% and put stops at break even. I only put stops at break even, or I think you should be putting stops at break even if you're securing profits. Yeah. So as you guys move along in your trading career, you guys will start to create rules for yourselves that will only apply to yourselves. Oh wow, look at that. Position got stopped out. Awesome. Perfect. So now if we can break above 18, let's say 18,500, I think this is going to be a pretty good idea for price to move up. Right? Simple. Now, if this candle closed now, okay, look, now this candle has closed bullish, right? So you need to follow price action. Following price action is really important. So if we talk about following price action right here, we can identify that, okay, on the 30-minute time frame, we've basically created a support, right? We've created a support right here on the 30-minute time frame. And if we've created a support, this now becomes a range, a 28 pip range, right? And then below the support, we have a 21 pip range. Then above these wicks over here, rejection wicks, we have around 27 to 30 pips right here. The price at which we booked 90%, why we closed there? Because the candle closed. Candle was almost closing, plus it was around, 10, 11, 12 pips at that point. That's why I closed the position. Right. So we're moving up over here. Perfect. Oh, I guess rejecting. See, this area, it can become very, very challenging because we need price to break above this wick to the left-hand side. If we can break above this wick, then we can continue pushing up. And if that break happens, let's say by New York Open, then you can expect volume in New York Open to continue to push price up. But right now, we're just in this range here, which is like a 30 pip range because we've created a support on 30-minute time frame because we're following price action. Now, at this time, you may ask, is it important to look at the 4-hour candles? Basically, no, because 4 hour is in this 85 pip range, right? This is not the best idea to trade based on the 4-hour candles. If you want to trade based on the 4-hour candles, you're probably looking at anything above 1821 for price to move up, right? Because right now the 4-hour candles are in a range, which is 85 pips. 1-hour time frame right here as well. If you look on the 1-hour time frame, let's do some scale fix magic over here. 1 hour now is also creating a resistance here, but this is almost like a 28, 29, 30 pip range on the 1-hour time frame. And that's a tradable range on the 30-minute time frame. Always remember this. When you're looking at the high time frames and the high time frames are ranging, those are pretty big ranges, right? And those big ranges are tradable ranges on the smaller time frames, which is why most people lose, because if they see a range on the 30-minute time frame, which is like 30 pips or 20 pips, they try to trade the 1-minute time frame or the 5-minute time frame, thinking that they can trade, but you can't. So we're going to patiently wait over here now for price to probably either break down or break up. Okay, so we got the 30-minute candle now closing bearish. We're basically ranging now. This is a perfect, picture perfect range at this point. Picture perfect range, right? And also this is a 30 minutes prior to NY open. All right, we're breaking above this area, right? This is where you need to decide whether this is going to be a good trade here or not. This is the area where we need to decide that, right? We are 15 minutes prior to NY Open, and based on all the live streams I've done in the past month, every trade I've taken prior to NY Open on gold has been a losing trade. So yeah, I'm probably gonna not gonna do that here. But if it runs above and goes up, that's totally fine. That's totally fine. I'm accepting that odds. But the higher odds are I've taken every trade prior to NY Open on gold and I've lost that trade, every trade. So I've learned my lesson to just wait for NY Open now. And I'm going to move on with that thought from this point onwards. I thought you were going to say you won. No, I've lost, man. Okay, perfect. Let's take a look at this right here. Now we have to follow price action. Remember when I said that there are these wicks right here we're rejecting? Now, you see this candle over here? It closed a very, very bullish candle. So maybe if we bring the zone down towards the most recent resistance, which is right here, right? See this on 30-minute time frame? We had this resistance. Now this 30-minute candle has closed an extremely bullish candle right here, right? So if this is NY open, what's going to be the probability based on the 30-minute time frame that price is going to go up? 70%. Okay. 80%. Perfect. Okay. And obviously the probability for price to just, for this candle to just come shooting down is going to be lower, right? Now someone can say, oh, it's because it's not going to be a 50-50 chance, right? That's something you have to tell yourself, that it's not going to be a 50-50 chance that price will either go up or it's going to go down. Of course, price will either go up and either go down, but the question is, what's the probability it's going to go up versus what's the probability it's going to go down? Because it can go either way, but it's going to go one way more than the other based on the candles you're seeing at this point. So there are two ways to go about this, right? If, let's say, for example, this candle breaks the low of the previous candle, then obviously it's not going to go up, right? But if this candle breaks the high of the previous candle, then there's a very, very, very high probability it's going to go up. Now, you can go two ways about this now too. Either you can be a conservative trader looking at NY open. You can say, okay, you know what, I'm going to wait for this candle to break the high and then go up. Or you can use dynamic risk, right? You can use dynamic risk and add positions as price comes down here, anticipating it to not break the low of the previous candle, right? So what we're going to do here is we're going to do something complicated, which is going to be dynamic risk. So we're going to use 0.25, 0.25 risk. and total is going to be 1% risk, right? Total risk we're going to add is 1%. So we're going to be using 4 0.25 positions. The first one is going to be right here as the candle starts. So this is going to be below the low of the previous candle, around 17 pips. Let's do that at 17 pips. Buy right here. Actually, let's bring it a little bit lower over here because modify. The spread can take us out right here. Accept, and we're going to let it play, right? Here's the thing: what you do with dynamic risk, right? With dynamic risk, if you're using dynamic risk, you have to be cautious, right? Now, if price goes up, that's perfectly fine. You didn't get any chance to add positions. If price retraces, then you can add positions, right? So hopefully we can get some. Okay, so we're getting some pretty heavy retracement right here, which is totally fine because our total risk was 1%. We're only 1/4 of the risk so far. So even if you can add a position right here as it's retracing in the first minute, the stop is going to be below the previous candle. And if price does come down and hit your stop loss, you're still losing less than what you plan to lose. Okay? Because your plan to lose is 1%. If price hits your stop, you're losing what? 0.5%. Oh, let's modify this here as well. See this right here? This is where you lose 0.5% if price hits your stop instead of losing 1%. So you're managing your risk. Now, since we got half our risk in, oh, okay. This is very, very volatile. Normally, it's not going to be this way, and you'll have to be very, very quick, right? So at this point, you're adding probably the rest of the positions back. But if we start to break the high of the previous candle, then you're adding the rest of the position back as well. So it's moving pretty quick over here. What's this over here? How much pips below the stop loss? I don't know, like 1 to 2 pips, 2, 3 pips right there, 2, 3 pips. You know, I mean, I would say look at the spread. If the spread is, let's say, 2 pips, then you can put your stop loss 2 pips below. So as price starts to break the high of the previous candle, we're going to add our full risk, right? Right now, we only have 75% of the risk running, not 100%, 75%. See right here, we broke the high, we added another position, maybe modified the stop because it's well in the middle of this candle, bring it below the low, because the reason why I've moved the stop loss below the low of this current candle, because as it's moving, we're not expecting it to break the low since it has broken the high, provided that the previous candle was bullish. So now we expect this candle to continue pushing bullish with NY open, which I think it it should move up, but we got to still wait for the 30-minute candle to close. Also, we've respected the low right here, so I think there's a very high probability it should continue pushing beyond and probably come up all the way towards 1820, 1821. I think that's going to be a pretty good idea. Oh, I guess we're retracing over here. We are retracing. It's very, very volatile. Aren't you going to put the stop loss of all the entries below the previous candle? Is very early, very early. Very, very early. So at this point, we're just waiting for the 30-minute candle. And I guess the stop is way too close. Probably bring it a little bit down over here below this low, because if this candle breaks its own low, then there's going to be oh, okay. This is very tough. 15-minute candle is about to close. 15-minute candle has closed right now. This asks for, how do you, okay, you get the 15-minute right here. Actually, we're going to leave it at the 30-minute here. We're going to wait for the 30-minute candle to close. News event, there is no news. There's no news. Close 10 pips, no. No, sir. Stick to my analysis. You have to stick to your analysis. I guess if we can start breaking the high again, we can add that position back. I think that's going to be a good idea. If we start to break the high, we can add that position back and expect price to continue pushing up towards 1820, 1821. Oh, a little bit too late. But this reminds me of the FMC I had. All right, so we got about 9 minutes left here for the candle to close. We're pushing up. Volume is in now. We have clean candle to the left-hand side. And yeah, I guess as we come to a close, we should come up towards 1821, 1820, 1821. Best position is up this pip, so we're going to secure that one right here. Dynamic risk. See, we're securing. Still moving up, coming up towards 1821. We're going to secure the second best one as we're coming up towards target. Secure the other best one right there. And then the worst one, put it at break even. That's it. I guess this volume came with Comics. Yeah, nice one, Daniel. Comics came up over here. Beautiful. Comet Comics. It's actually Comet Comics, not Comics. Comet because the comet moves super fast. So we made a little joke out of it. So now, looking at the 4 hour, see the 4 hour candle has broken the high of the previous 4 hour candle. So I think with volume, I guess the next stop should be around, 1825, 1826, maybe. Looking at the 1 hour, we are running pretty good over here. All right, so let's secure this right here, around 50 pips on this last runner. And that's it. Used dynamic risk on this trade and it worked out, I think, pretty well. First we had a sell over here, but then with NY open, we strategized, we waited, and then we added positions and used dynamic risk. One position got stopped out, but essentially now we're up around 3% here for today by risking 1% per trade. Right, so let's move on towards the next day here now. Oh no. Oh no. You know what I did? I did a bad thing. I moved over the whole week. Whoops. Let's move back. Let's move back. Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday. What was the date? 8? Yeah, the date was 8. Okay, the date was 8. Yeah, let's move back. So we're going to move back towards 10, 9. Okay, yeah, there we go. We're good. We're good. Yeah, awesome. I know you close position manually, but do you use TP positions? No, I don't use TP positions. You should put diamond machine. I have no idea what that is. All right, let's move on towards pre and Y over here. 8, 9, 10. This is London Open. 4, 5, 6. 6 a.m. Eastern. We're back at 6 a.m. Eastern. Let's remove all these analysis here from the chart. Remove this one. Go towards weekly. We got weekly right here, moving up over here. Awesome. We got a resistance at 1830. We may tap into that 57 pips away, but let's see. Daily is also, the daily candle broke the high of the previous candle. So yeah, we'll see if it continues to push. If we think the daily candle is going to continue pushing up, we need to see some sort of support on the 4 hour or the 1 hour. So let's remove all these zones on the, wow, 4 hour looks ugly. Looks super ugly here on the 4 hour time frame. Awesome. So there's basically no analysis on the 4 hour other than the fact that the candles are just printing very, very ugly over here. Let's take a look at some news. If you have some news coming up, we have we have PPI over here for USD, and yeah, that's about it. Let's take a look on the 1 hour time frame. Now, looking at the 1 hour time frame, we need to do some analysis here now. We need to identify the most recent resistance, which is right here. And we need to identify the most recent support, which is right here, right? Now, we need to do some analysis based on this price coming down and then moving back up. When this price came down, it broke below support, which was right here. We broke below the support and then we came back into this range. Now, if we break back below 1822, this is a 25, 26 pip range, maybe a tradable range, but where will price go if we break above 1820, what's this, 1826, 1827? Let's take a look to the left-hand side. Price is going to go to the left-hand side. We have 16, 23, very, very tough. Very tough. We have some rejection area here to the left-hand side on the 1 hour time frame. Very, very, very tough. You know, we would maybe want volume to continue pushing up. I mean, this is 2018, 27. Yeah, we'll need a lot of volume for price to move up. To maybe we can move up with, you know, with NY Open or something like that, because that's a very, very tough area. I think Tuesday is going to be a tough day here, but let's take a look on the 30-minute time frame. Let's clone these over to the 30-minute and let's take a look on the 30-minute time frame here. Looking at the 30-minute, we are still consolidating here, very, very tough. So yeah, I mean, I honestly have very limited ideas on what can basically happen. I mean, if we can break and close above 1826, then obviously we can move up. But other than that, it's just so very tough. Very, very tough. See this candle over here, the 30-minute candle closed with no wick on the top. So this means there's a very good probability for price to move up, because as this candle closed, this candle didn't even try. Can we zoom in more? No. This candle didn't even try to go up. It just moved down. So this means there's a lot of bearish volume. But if this candle breaks the high right here, then I guess we can continue to move up. But I don't know. I don't know. Even this range here is like 19 pip range, 18 pip range. Below this area, you got what? 20 pip range over here. I mean, what are you going to do? So you just got to wait for this candle to close here, I guess, the 30-minute candle. I mean, if it breaks the low, this range is too small to trade. If it breaks the high, then maybe we got some chance for a little trade over here. But other than that, we are SOL. Shit out of luck. No trade range. Yeah, exactly. Oh, look at that. Look at that. We are breaking the high right here, buddy. Now, this may seem like a great, great, great impulse entry, but the only problem is there's been a rejection right here. So if we want candles to go up, we need this candle to close bullish above this candle right here. We need this candle to close bullish. If it closes back in the range, then there's no trade. So let's just wait over here. See that? See how it pulled back in the range? That's something we don't want. Look at that. Garbage. All right. So now the candle has closed bullish, a little bit above the previous candle. If this candle makes a lower wick and breaks the high of this previous candle, and since we're in pre-New York volume time, I think we can continue pushing up. I would like to think so. I would think that's going to be a pretty good idea, but it needs to happen. Otherwise, there's going to be no trade. Oh. Uh-oh. Looks like we're about to push up over here. Oh, is this too late? What's going to be the stop over? Stop is going to be 14 pips, 15 pips. Take a buy. Look at the trade. Oh, wow, nice. Pre-New York volume. Oh, okay. So just close 90% over here. It moves pretty quick at this point. Did not really expect that move, but amazing. So now we can continue pushing bullish. We can continue pushing bullish based on a daily. We're coming up towards 1830. We can go up there. 4-hour time frame has also broken the half the previous 4-hour candle, and it has stopped us out. And it's looks like it's pulling back by tapping into that 1828 area we had to the left hand side. I guess that area was just way too strong. But still, you know, we still got that impulse entry with NY volume to continue to push up. Also, we got news over here later on, PPI. So, yeah, I was really expecting price to continue pushing forward. Oh, wow, we're coming back in the range over here. Coming way back in the range. Okay, so I guess we're going to wait for the news over here now. Oh, wow, okay. Coming way all the way down. We also got news here soon. Now, this is in a no trade range, right? Because even if we break the low of the previous 30-minute candle, it's like, what, 14 pips away? It's not enough at all. Not enough. 14 pip range. Nope, not enough. See, we broke the low, but not quite. Now we've broken the low right here. This is a 14 pip range. You can't trade it. I don't think I would have traded and waited for the news. Okay, that's fine. That's fine. But I executed this based on what we talked about. But if that's your plan, not to execute on day when it's news, that's totally fine. You know, that's your plan. Your plan is always there to keep you safe. So this candle is about to close over here. So let's wait for this candle to close. Go to the 30-minute time frame, and this candle has closed bullish, but we are still under this resistance. We're still under this spell of resistance. It has still closed bullish. So there's nothing to do except to wait for this candle to close. Let's see how this candle closes. Go to the next bar. See, next candle has closed like this. Now we have NY open. Right now, there's no probability to state where price is going to go at NY open, right? Because we have no confirmations of price to go anywhere. So this is where it's literally 50-50. Here, it's literally 50-50. Right here, it was more than a 50-50 for price to go in either direction because we had some sort of a confirmation. Right here, we have nothing. We're in a range. We're under resistance. I mean, it's just very tough. Very tough. Can't really do anything over here. You know, it can go up, it can go down, and maybe, you know, then maybe price is setting itself up for news because news is going to be here in about 27 minutes. Maybe price is just setting itself up for news. Like if we break in close above, let's say 1820, oh, okay, 26, we can go up. But if we leave a big wick over here and we, let's say, close below 1821, then probably we can start to move down and start to correct this move up from yesterday. Right? Okay, so we're coming up over here now. So let's see how this candle closes prior to news. And we closed bullish. And we have news. PPI, I haven't really traded PPI. I don't want to trade PPI. I mean, you know, we've basically closed above this area. I mean, just by looking at price action, if we break above this high, obviously we can go up. You know, that's technically that's all what would make sense. See, we've broken the high and with volume based on news, it should be continuing to push up. Oh, okay, very nice. Sometimes you may miss trades, but those missed trades, you're also anticipating price to do a certain thing because, anyway, because because though that anticipation is going to help you for the next time those things happen. Yeah, didn't really expect that to happen. Crazy. Moved up, moved all the way back down. Don't trade news, guys. Let's see how this candle closes here. We're done for trading on Tuesday here anyway. Oh, nice. Bullish. So guess if we break the high right here, right? We're breaking the high right here. There's a very good probability we can continue to push up. But, let's see here. Oh, we're very bullish. Daily, oh yeah, daily's at a resistance right here. So, daily resistance. Why do we consider the zone above 1821, 1821, 794 as a possible rejection zone? Okay, let's take a look at this over here. 1821. Man, Uzi, you made us stop right in our tracks over here. What's this? 1821, 1821, 794, 79. No, we're only looking at this one right here because this is where this candle broke below 1821 794. I don't know, man. It's just you're way too specific. We just this one right here. We're just looking at price to this one right here to break below. But anyway, there's a high time frame resistance right there, so not too sure if it's going to go up or go down. So we're probably going to move on towards the next day here. Oh, wow, crazy. All right. Let's move on towards the next day here. Tuesday. We're going to move on towards Wednesday. Pause this. Pause this. This is London Open, 4, 5, 6 a.m. Eastern. Okay. Looks like we are consolidating here now. So we're going to do our fresh analysis here again one more time on the 4-hour time frame, moving down towards the lower time frames. Okay, so obviously daily has rejected this area as resistance, so there's a probability daily can go down. Looking at the 4-hour time frame, I would like to say that 4-hour can continue to push down, but the big problem is that you can see how the 4-hour candle had a lot of volume, and then we had more volume, but this candle was smaller. Then we had this candle smaller than the previous candle. Also, we're coming down into rejection area. So maybe on the 4-hour, we created a high at this point to form some sort of a support and then to retest the high, right? Now notice I'm measuring this zone 50 pips above the high of the current 4-hour candle, right? Notice these little things. I'm not measuring it all the way from here. I'm measuring it above the high of the 4-hour candle for price to move up, because if this 4-hour candle can break its own high, then there's a high probability we can move up, because also it's a Wednesday, and Wednesday are high volume days most of the times. Back in the past, Wednesdays were the days where I would have most of the losses because I wouldn't recognize volume, but now that's not the case, right? Or if the new 4-hour candle can break above the high of this 4-hour candle, then we can move up. So what we're going to do is we will remember this price here, which is 1826,700. If we start to go above 1826,700, that means there's going to be a probability for price to move up. But we're going to keep that in the back of our mind. Let's take a look on the 1-hour time frame. Now, looking at the 1-hour time frame, we're obviously creating a support right here. And if we can break below the support, right, you have this wick to fill 27 pips away and probably down to the support around 30 pips away, right? We identify the most recent support, and we're also identifying where price can continue to move down. That's our idea for sells. Now, looking for buys, obviously we have some sort of a rejection right here. Price created some resistance you can see, and then this kind of rejected this area, and then we continued to push down. Now let's break this down in the 30-minute time frame. Okay, let's remove these analysis, and we have this support on the 30-minute. We have this resistance on the 30-minute. Very, very, very tough, I would say. Extremely tough at this point. And basically don't really know where price will go. I mean, if we do break below, but we'll need price to break below these wicks to the left-hand side to fill this wick and then continue pushing down, 30 pip range. That's our probably target for this sells. Now, if you remember this price here, this is 1826,700. I want to see how that 1826,700 looks on a 30-minute time frame. 1826,700 is above this resistance. So maybe something above this resistance would make sense for price to move up. Let's see if we have any news over here. We have CPI here. Okay, no wonder we're consolidating. Beautiful. We have CPI. Amazing. So maybe price can move with CPI, right? Yeah. See this? We need to break below this wick for price to move down. Oh, we're breaking below this wick, but we have CPI at the same time. I guess we're gonna wait for CPI. We are lucky because in this simulation, we also get to trade the news CPI, buy stops and sell stops. That's the only way to trade news. And I think that's the reason why gold is ranging here, because we have a very, very high volume news event coming up. CPI. I think this was the start of the inflation right here, apart from COVID. Because look at this, they're looking at 0.6%, right? Right now, CPI is at 1%, right? Let's take a look over here. Forex Factory. Forex Factory. CPI is basically the change in the prices of goods. So wherever you live in the world, you're seeing prices are going up, which means CPI for your country is going up, right? Because the prices of goods are increasing. Let's see, it was last week. Oh, that was pound. I think it was the week. It was the week before this week. Yeah. Oh no, that's PPI. PPI. I think it was the week way before, well before this week. Wow, time flies. Time goes quick. Yeah, here we are. See this? We're at 1.0%. We jumped from they were expecting a forecast of they're expecting a forecast of 0.7%, but it jumped up towards 1%. This is scary because now they're saying that prices of goods and services, look, change in the price of goods and services purchased by consumers. Me and you guys, we're all consumers. We're buying eggs, services, everything, and that's all increasing. It increased more than they expected to increase. And for the past months, it's been increasing steadily. Look, before COVID, it was at 0.2%, 0.1, negative. It was amazing, smooth sailing. But after COVID, things have started to drastically change. You're seeing increase month after month after month. Now we're at 1%. It's not going to go below 1% now. It's going to continue increasing because interest rates are increasing. This is scary. Very, very scary. But anyway, let's focus on the CPI over here now. Also, during this time, inflation was also up. So even no matter what the numbers are for CPI, every last CPI we've seen, gold has just moved up. Every last CPI we've seen, because market realizes, oh, we have inflation and price moves up, and then that move is corrected in the next week or the day after that. Same thing happens with interest rates. But the only thing we're going to do here with CPI is just buy stops and sell stops. So let's speed it up here a little bit so we don't waste any more time. See that? We're consolidating here super, super hard. 1, 2, 3, 4, 5, 6. Okay, we're getting close here now. 28, 29. See, now we're getting close, right? So this is going to be two things normally which are done, right? The first thing is there's a sell stop around 1825 below this 30-minute candle, which is 21 pips away. Distant in pips, 21. It's going to be a sell stop. Stop is going to be around 15 pips, right? And then there's going to be a buy stop. Buy stop is going to be around, I would say, like 12 pips away. Let's do 13 for good measure. Buy stop. Oh, it's too much. Too much, buddy. Let's move it down here a little bit. down here. Stop is going to be around, looking at around 15 pips. Accept. And yeah, we're going to let it play now. Are you guys ready? I'm ready. Oh, we moved down. Oh, wow, this is going in a loss over here. Okay, we did move down. Interesting. So what were the numbers over here now? Numbers were good. Oh, 0.9. It was higher than the actual forecast. So the thing is, if the numbers are good for USD and price is moving down, that's perfectly fine, right? But the same thing happens with inflation, right? If you guys remember the last CPI we had, if we start breaking above the high of this candle right here, then we could say market is, keeping in mind that there's also inflation. So we're going to remove this right here, and we're going to attempt to take a buy as we break above this high, and it's going to be around 0.5, 0.5% risk. Let's see over. Sell stop got stopped out. No, sell stop got in a drawdown, so I just closed it. See this? We broke above the high. Oh wow. Crazy. Close this. Went up way higher than expected. Wow. So that's something we've done here in the past here as well. The same thing happened on interest rates, which we streamed live. We broke above 1835, we moved up. Same thing happened with all the previous CPIs. You look at all the past CPIs, this is what you're going to see in the past, let's say, 6 months. Oh my God, look at that, still moving. 1846. Incredible. Infinity and beyond. It moved 100 pips from where I closed. This move was like 200 pips. From breaking the high of the previous candle, almost 200 pips. Insane. Awesome. Very nice. Oh my God, still moving up over here. This is where people get clapped because they try to take sells and price like, no, buddy, we're going up higher over here. Runner? No, no runner. Closed everything because it was news and I had no idea it's going to continue moving up over here. No idea at all. Wow, look at this volume here now. This 30-minute candle is 80 pips. This is 60 pips. Crazy. Okay, let's move on towards the next day over here now. Yeah, incredible. All right, this is London Open, 4, 5, 6. 6 a.m. Eastern. We are back at 6 a.m. Eastern, and what we have witnessed yesterday has been crazy, crazy, crazy moves yesterday. So now we are at a new day over here. So let's take a look on the weekly. Weekly has, wow, obviously it has gone up over here with CPI. Amazing. Daily has basically also gone up. There's a potential wick to fill. But the problem with the daily is that we've broken above this resistance here. And the further away price moves from a resistance, which now will become support if we go down, the higher the probability is for price to retrace. The further away it moves from a zone, the higher the probability it may retrace. So we're not sure how far it's going to go up. So let's take a look on the 4-hour time frame. 4-hour is just pushing up and up and up. We basically created a support. Then we had a resistance formed. 4-hour didn't give any importance to this area and continue to move up, probably in anticipation to fill this wick over here, but that's another story. Let's take a look on the 1-hour time frame. Looking at the 1-hour, we are basically the previous 1-hour candle closed with no wick on the top. We also have these rejections, and below these rejections, the first 1-hour support we see is at 1851. So we need to consult the 30-minute time frame to see basically what's going on. 30-minute is creating a support, obviously, and just by looking at the trend, even someone who has severe, some eyesight disorder, they can look at this and say, oh yeah, what, the trend is bullish, right? Candle has also closed bullish, but with little to no wick on the top. Now, my big rule about candles having little to no wick on the top is to wait for the next candle to close. And that's what we're going to do over here. We're going to wait for this next candle to close and see what we get. Because this is a support we're forming, we're also breaking above this resistance. We have a potential wick to fill over here and then potential wick to fill over here. So we don't know what's going to happen. Also, the trend is bullish. This candle is about to close. Right here, candle has closed. Let's take a look on the 1 hour time frame. Oh, 1 hour candle is just making a lower wick. Now, if the trend is bullish, and if this 1 hour candle breaks its own high, I think there's a very good probability we can continue pushing up. If this 1 hour candle can break its own high. And that breaking of that high is probably going to be breaking the high of the previous 30-minute candle for price to continue pushing up in this heavy, 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 heavy uptrend. Let's see if we have any news. We have no news. Any news on Friday? No news. Nothing. Awesome. So let's see. Oh, 11/11/21. See, right here, we're breaking the high at this point, right at this point, in the first 2-3 minutes, but this is also the second half of the 1 hour candle. So this is where the rule is an exception. See this 1 hour, it has broken its own high. I think there's a very, very good probability we can continue to at least, maybe halfway through to this wick, probably secure some positions and leave some running or some sort. So we're going to go with a lower risk because we've already accomplished a lot over here. Stop is going to be below this current candle around 16 pips below that wick there, and we've broken the high. We haven't made a lower wick, which means there's a very high probability we can continue pushing up over here. So I guess that's something, a really good idea to execute on. Plus also we have an uptrend at this point. But as we mentioned on the daily, the higher we go beyond a daily zone, there's a high probability for price to reach. Oh, okay. I guess that retracement wasn't that nice, but I guess let's secure this right here a little bit. 90% secured, put stops at break even. Simple, we just broke the high. Price was in an uptrend. We broke the high without making the lower wick. 1 hour candle also made sense, right? For it to break its own high to go up. The reason why we didn't execute on this 30-minute candle, which was the start of the 1 hour candle, was because the previous candle closed with no wick on the top. That's the only reason why we didn't execute on that. But other than that, yeah, see now this candle here, it's crushing down, and if it respects this low, just as a trade we took earlier on, if you guys remember, on the NY, I guess, if we respect this low, then there's a very high probability to continue pushing up. But if we break this low, and if we break below, let's say 1860, 1861, also below this wick, then there's a very, very, very good chance we can correct this move all the way back down. So we got our first trade. We're up about almost 6% here for the week. Very nice. And see, we're breaking the low now, so those buys are going out the window. 1 hour. Oh, wow, look at that. 1 hour is also breaking this low. So now there's a very good probability for the 1 hour to fill this wick here to the left-hand side and probably continue pushing further down. Interesting. Very interesting. This is support we have. But if we break below this wick, then it's gone. Gonzo. Oh wow, yeah, it's gone now. It's going to correct this move. Got one little trade over there, but that was about it. It was like, 0.5%, nothing major. But we only risked about 1% this whole week, this whole simulation. Crazy move over here. Let's take a look on the daily here. Daily, oh yeah, daily is also rejecting that candle. 4-hour candle is also coming down. 1-hour candle is also coming down, leaving a big wick. Wow, here we have the 30-minute candle forming now. We broke below the support. So I think a pretty good idea for so we're going to attempt to take a second trade. Probably it's going to be a sell after we create a resistance, or depending on how this 30-minute candle is going to close, maybe look for some sort of a, oh, I guess not. I was going to say buy, but I guess not. For price to retest this area, because that's a pretty good range here as well. But we'll see. Let's forward this candle. Candle has closed bullish. So maybe do a very small risk, maybe 0.1, take our last trade. And this last trade will probably going to be the retest of this 1861 area around, 28 pips away after it does a retracement right there. Because, if we are looking for a sell, we're looking for price to reject this area to go back down. But if this range is like, a good 34, 35 pip range, then, I mean, why not, right? Stop is going to be pretty big over here. Let's do 280. Just what if, 0.1% risk, nothing major, absolutely small risk, just to taste this retracement up towards 1861 if that happens. Because now this candle has closed a strong bullish candle in an uptrend right here. So this would make sense for price to maybe retest 1861. Let's forward this candle, see how it closes. Oh, nice. We closed bullish over here. Beautiful. Actually went all the way back up. Forward this a lot more. Oh, there's no retest over here. Interesting. All right. Awesome. So this marks the end of this simulation. I think we did a lot of stuff here. We managed risk. We used dynamic risk. We had some news, which was lucky. We got some news. We looked at some confirmations, candles with wicks, candles without wicks. We managed our risk here as well. The main thing is we kept our risk between 1%, 1% risk, and that's it. Where we were unsure, the key is when we were unsure, we lowered our risk. We used less risk. So this recording is going to be up in the database in about 3 to 4 hours. It's going to take some time to buffer, and awesome. So we're gonna see you guys tomorrow for the New York session. Take care.